This is Rod Rollins coming to you live from the digital studios of Mr. X, presently located in Janet Mothershed's basement, broadcasting into the digital universe. I'm going to try to keep this short and sweet. I don't know if I like doing videos. The resolution is cranked as high as I can get it, so you might want to go down here in your player and turn your resolution up to HD. It's down here somewhere. Okay, S&P 500 ETF, the SPY, as a proxy for equities in general. And right here the market popped back up. Okay, you could put a little line there. It's 101 out, it's supposed to be 103. It's crazy. Let's make that line red. Okay. And there's a couple other little formations in here, but we're not going to worry about those. This is a big rectangle. That line could be straighter, but it doesn't really matter. And this was a rising bearish wedge. It morphs when it breaks out of the wedge. And that was 2015. Very difficult market, going back and forth. And you got your sellers up here and you got your buyers down here, and the sellers went away right here. And these cycle highs and cycle lows usually will occur along formation lines or trend lines. Funny how that works, huh? And these guys have no idea about this stuff. This is cranking over a lot of stuff there, so that hung up there a little bit. But this is a big uptrend right here. It's a big bull market. This is the Trump jump right here, because the market also moves sideways here. This measurement from this rectangle comes from right there. Nothing very difficult about that. And the market came up here and it hit that rectangle target. Doesn't mean that it can't go higher. And it's been going sideways here. Now, you have all these technical analysts and pundits saying this is a top. And they're using oscillators in a trending market. It's not the proper tool. Use moving averages, use a trend line. Oscillators are for a cycling market. This is a cycling market right here. Okay. And their oscillators are not tuned right. They're MACDs, they're RSIs, they're stochastics. They're out of the box traditional indicators where they're using 12 days, 14 days as the parameter. They're not even tuned right. And an oscillator in a trending market, we're in a big uptrend, will leave remnants from the data series. So that puts you into what's called spectral dilation and Aliasing. Aliasing is like the old movies, and you see the wagon wheel going backwards because the wheel is spinning different than the camera rate. And you can look up Aliasing and spectral dilation. And they have no roofing filter. You need a roofing filter because they're looking to day trade or position trade, and well, they got a mess of data that's just full of noise. That's why we're looking at a weekly chart here, and I'll show you a daily chart. Well, first we'll go look why they don't have it tuned. This right here. And this is called, I can't remember all these names, auto correction period ogram. might not have that right. But this is showing you the cycle. It's pulling the cycle out from the heat. Okay, and then this is an average of that heat. So right now we're looking at a weekly chart. And you have about a 16-week, call it 20-week cycle going. Cut that in half. 10. You would set and tune your RSI, MACD stochastics to 10. They don't even have them set right. You have to tune a guitar. You have to tune a car. Because the weather's changing. The wood shrinks and expands. Every time you pick a guitar up, you got to retune it. And that's what they're doing. That's why they're wrong. And they'll come out and say, oh, the market's topping, and because my oscillators say so. And that's called climbing the wall of worry. And now we'll go look at the daily chart. I'm doing this on the fly, so I don't know how this is going to come up. Okay. And right in here on the daily chart, this back up, get that back up, and these all moved around because I went to daily. But right here is where these guys, my oscillators, everything's overbought. It's overbought. The market's going to correct off. I call it the oscillators are they're compressed, okay, and they're going to stay compressed, and that's where the good things happen. And like I said, the remnants of a major uptrend are going to keep their oscillators compressed. But right here, all the pundits, they're all over the place, and stockcharts.com has them all over the place. Carl Swinland even, and he's no slouch. Market's going to correct off, topping out. My oscillators say so. Okay, he doesn't realize, most of them don't, there's a cycle high sitting right here on the dailies. Okay, came off the cycle high, and he doesn't realize again, and then all these other pundits don't realize there's a cycle low. And then what did the market do this week? It came off the cycle low, and it even broke above this cycle high. They'll have to come back out and say, oh, well, you know, my oscillators were wrong, or, you know, they'll say something. They'll come up with something. And that's what's going on. That's what's going on in the daily versus the weekly, and spectral dilation, all that good stuff. This is an uptrend, and they're using the wrong stuff, and the wrong stuff they're using isn't even tuned right. Okay, that's back to the weekly. And we'll go look at bonds real quick, I think. Try to keep this short, because if you upload this to YouTube, it takes a long time and all that kind of junk. But I'll upload it to YouTube, I think. Here's bonds, but this is UBT, not TLT. This is a double leverage, 2 times bond ETF. So say, it's got a beta too, so say bonds moved 5 points, this will move 10. And it'll do the same thing to the downside. So you're leveraged up 2 times. And of course, they're 2 times more dangerous. And 2016, we had this wedge, it broke. You could just call it a trend line. And then it came down and has been in this rectangle, a consolidating pattern. It popped its head out of this rectangle, gave a little fake, and that cycle high hit this overhead trend line resistance, didn't like it, and now it's back down here testing this rectangle. So it's being real difficult at this point in time. You can see right here, there's no trend. This is a downtrend. And this being tight like this, that's no trend. And this is where the cycle high comes from, right there. That's the cycle high. And you look at your entropic spectrum, and this goes back to that tuning. You're looking at a wide range of the indicator. Instead of seeing 12 or 14 days in a squiggly line, you're seeing, I think, about from 6 to 24 days, maybe 6 to 30, I don't know, something like that. So you're getting a big view. Yogi Bear, he said, look and you'll see a lot of stuff. I don't know if that's exactly what he said. But that's what's going on with bonds. They're back down here testing this rectangle and this cycle high. They could drop in here and drop back out. But you still got this test. It's flirting with this right here. So we'll see. We'll see. But it did do this little fake out here. But this didn't, the trend vigor didn't ever expand on it. But that was a tricky little thing happening there. And let's see, that's about it. And of course this is opposite of interest rates, the inverse. And should we go back look at equities again? I'm going too long probably. We'll look at this second sheet. And your squeeze indicator right here, this is measuring the difference between the Bollinger Band and the Kelter bands. It's positive. This is, what is this called? Empirical, it's looking for trend. Empirical mode decomposition. And it's an uptrend. It's a little bit slow sometimes. This is a proprietary money flow indicator. It's not your regular money flow. It's doing okay. And this is a pass band. This is another, I'm a Dr. Eller's disciple. This is another one that he made up, or did. It's all from formulas and stuff. And when you're up here across the band, that's the meat of a move, and you're still in the meat of this move. It's like a fancy MACD, but it's not, like I said again, it's not dependent on the tuning of 12 days or 14 days. You know, somebody says your MACD should be set at such and such parameters, excuse me. Okay, and that's about it. All the other sheets are going to look about the same, and some of these sheets of formulas are still being worked on, but this is the first main sheet right here. This entropic spectrum gives you a real big broad look of what's going on from what would be considered the traditional indicators, the little squiggly lines. And you can see here there's almost no drag. It's like a wing or a car designing for coefficient drag. And of course it can't be zero drag, so say it's 0.000001 drag, but there's no drag there. Over and out on a crazy walkie-talkie.